is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up. And,
awesome.
I know quality when I see it, or at least I like to think so. And, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Hi everyone, Basil Chapman here for Tommy O'Brien. This is the Tom O'Brien Show. The Dow is at 526 on this Tuesday, the 6th of January. We're looking at 49,502. Wow. Into the 49,000s. We can now start thinking about 49,900 as a very strong resistance because that 50K level was just only dreamt about earlier on last year when we were starting to move strongly up, and certainly from that April low. All right, here we go. The Dow is up 516. The S&P all-time high as we speak, SPX.X, there it is. All-time high, 6947.49. 6945.77, so we're about 2 points higher than the previous high. It's starting to change. Now, I don't want to do this because it's really Chapman wave technique. I'll do it in my show tomorrow during the technical show part of the, this is my, there we go, let me just get that. Tiger. This is Tiger Technicians Hour. I'm just trying to change something. There you are. Okay, S&P. QQQ, no. Hasn't quite made it, but it's trying to break this inside track repellent zone. See how it keeps getting repelled from this this cone formation. I call it the falling axe formation. I think that this week there's a chance. It's at 623.25. The QQQ, this is the NDX 100 trading vehicle. Up 527 at 623.27. Wow. If we can see 629.22, that'll break out from that resistance, and it will target the 637.01 in January. That's the all-time high. That'll be really important. Let's go to the IWM, the Russell 2000 small caps. Nice session today. Nice breakout, up 2.81 at 255.50. I should just clarify. So we are along the Dow from the April low, and then again, just most recently, we added to that position. We're along the IWM. The Russell 2000, we were along a long time ago in April, and we got out and we got back in. I'm anticipating all-time highs, and this is the iShares Russell 2000 ETF, and major support now is at 255. Major support is at 244. And when I mean major, I mean on the shorter to intermediate term. Let's go to the SMHs, semiconductors, where the semis go, the general market goes. That's been my theme for years and years and years. Well, this is a nice breakout, all-time high, leg B in the monthly chart. I should have explained. In the Chapman wave methodology, I alphabetize each peak, successively higher peak. D is the objective to get to when you're in a buy signal that gets upgraded to a buy mode. And then we have to do other techniques. Once you get to D, within 3 bars, if you get to a higher high, then it can actually go all the way to another 4 peaks. It becomes a little bit more complex at that point, but the simple part is just to count the waves. So in this case, and remember, the Chapman wave is the waveform that never sleeps. So we're looking at the SMH's all-time high. Now, this, I think, is going to be something to consider because IYM, haven't updated it today. Let's see where it is. Look at that breakout in the weekly chart. Leg D, all-time high in the weekly chart. Monthly chart, huge leg B, and a breakout. Now, you see this pattern right here? I saw that just a moment ago. Where did I see it? Oh, I had a question if I look at it. Look at this daily chart. You see, there's a D to an E. That should be what I call that the moment that I spoke about, that right, the instant restart. But look at the way you pull back from that E. So this now looks like it could even be a brand new move to the upside. So I'm just going to call it an F for now with the sequence A, B, C, D, E, F, G. But look at this. I got asked about this a moment ago. We looked at it recently, and I said, it's looking very good. Holding the 200-period moving average, and they came back and tested it at a 98.94, and now it's zooming up. And what is this? It's really important that this moves. United Parcel Service. I did this the other day. Look at that. 82, round number low. Back in 2020, it was maybe February or March. And what does it do? It comes back. It goes all the way to the 230s, 82 to the 230s, peak D in the weekly chart. And then what does it do? It comes back down and it tests almost exactly. I love the expression almost exactly. It goes to 82, round number low, on the 13th of October. 13th of October, remember? What was the low before? 82, round number. Can you imagine going from 82 all the way to the 230s and then coming back? And what does it do then? It tests the exact low, and it's rallying right off that. I like this very much. So here again, look, peak DE, but we went underneath that D. So this actually has to be considered, I'm calling it an F, but it could actually be a brand new A. This is very exciting news because you want to see these shippers moving like this. It was terrible that it came down. Where is FDX? FDX, Federal Express. Whoa, another breakout. Going to the 308.50. I've done this for years. Now look at this pattern. You see this cup formation? I had drawn this in from the high that was made back in 2024 at 308.53. It came tumbling down to 194.30. So I drew this in with the Chapman wave inside wedge dashed rising trend line. I call it the inside wedge trend line. It's called the dashed green on the way up. Target resistance line. I had a 1-to-1 left side, right side price time match from the high that was made back in November of 2024 down to the low of November, but it was imbalanced. It was kind of lopsided. So it chose this doji candle right there. And I said, if I'm correct, it should get to 308.53 there. You see how it coincides inside wedge with the Chapman wave symmetry of the bar sequence, left side, right side price time match to January. So we've got 308.53, it's at 305.64, and it's still January. It's just begun January. That's exciting. I think that's really a very positive news for the general market. All right, let's get back to the market. We want to look at bonds. Let's look at the TLT. The TLT made that peak in the weekly chart, arched over. It's like an inverted V. And it's just making lower lows and lower lows, not seriously, but enough to say, well, yields are not coming down. And look at this monthly chart, not a very good pattern. So the TBT, which is the inversion, this is the actual yield itself, moving up, but not very much. And it kind of got to a resistance level over there. I'll draw this in. I like to draw trend lines, just the outer edges of the bars. Look, there it is. Take that to that. And you've got yourself some resistance right there. As we do this, I didn't look at the dollar this morning. I'm going to look at the dollar. DXY, the dollar right now rallying, but it needs the 9-period moving average to cross positive. We'll be watching this. It's just a nice bounce right now. Oh, Bitcoin. As we go to the break, Bitcoin is down 1,925. Had a good session yesterday. It's just kind of in a holding pattern. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show.
Researching trading techniques on how to begin your trading journey. You've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Yes, so this is going to be very interesting. In the last 45 minutes, do we hold this pattern or we start to see a bit of a pullback? Let me just go to this. Let's see. Yeah, this is the E-mini 1 minute chart. All right. I'm going to be doing this because Tommy's not here. I usually do my little interview with Tommy just to overview what I'm looking at, why I'm looking at it, what we've done, what I've done for subscribers. You remember I had a webinar a couple of weeks ago, and I said at the time that anyone interested in this new phase of the market where we're looking at a rotation that's just taken apart the old winners and it's begun to really focus on the new winners. The old winners were now losers, and we're going to look at those. There's been a rotation into the deep cyclicals like the industrials. And anyone who subscribed and got my newsletter and got my webinar, as well as my picks, I think you should be, I hope you're very pleased because we've done very nicely. Now, let me just explain what it is. So, I just want to mention Bitcoin. You see the rectangle? I've discussed rectangle formations, how that's such strong resistance at 95,200s. And look, it's just kind of stalling there. All right, let me go through things. Actually, there's a nice way to do it. Let me just go here, and I'm going to show you something. So I've used this and said this is really important. The reason why we've remained in our Bank of America for so long is that the financials, pink monthly chart bars are the XLF S&P Select Financial ETF, and the blues the SPY S&P 500 ETF. Simply, there's nothing more. There's absolutely nothing more simple in any technical outlook you can have on the market than putting just two symbols together to see how they match for peaks and troughs. The XLF, and I think that if the financials are strong, that's always a really good indicator that the market should do well. Well, look at this. Every single trough and every single, except for the month of October, November, there was a discrepancy by 1 month. But otherwise, almost every one of these turns have been exactly on pace. And look, we've got all-time highs in the XLF, the financials. That's really important. And we've got all-time highs in the S&P, another one made today. All right. Done with that. Now look at this. Just using a very simple indicator. This isn't specifically what I use all the time. I use it a lot. If I can find it right there. Okay. So look at this. I'm just going to make it as easy as possible. Look, we have a whole bunch of positions. We've had some positions for a long time, but then we add to them. So if I can pull this up, there it is. Okay. So here is, look at this. I use the MACD. See how the MACD is a little lesson at the same time as I'm showing you our positions. Look at this. The yellow of the MACD, that's the faster moving average, and the red slow. Look how that yellow mimics the price of what you're following. It's really important. I heard Fidelity's discussion on the MACD the other day. It was really disappointing. I mean, there's so much more that you can discuss. The histogram is the distance between these bars. Look at the stochastic, how it's made this M and then a W formation, and it's confirming that this particular chart, which has just gone to an all-time high, is acting extraordinarily well. But look at the 9-period exponential moving average, the green line, as opposed to the pink line. I wonder if I can take just a moment here. I'm going to widen it. Style, make it nice and fat. Okay, there you go. Okay, there it is. So you see green and you see pink. I changed it to pink because red would blend in too much with the bars. What am I looking at? Rocket Lab. We're in the 48s. Here it is at 85. We tried to add to it. We just missed adding to it. But look at this, all-time highs. It's doing very nicely. And let me just go alphabetically. So the diamonds, we're still long. The Dow via the UDOW 3 times long, all-time high. Look at that green. Look at the way the MACD's gone back to positive. The stochastic still has a way to go, so maybe the price has a way to go. Very nice. Look at the green moving average. Let's go to AA, Alcoa. Look at that move. I mean, we're in right down from there. It is trading at the 63 level. And let me just get this up here so that I can see it, and then I can give you exact numbers. So Alcoa, we're in at 43.60 in December of this year, December the 4th. Oh, it's a month. And look what it's done. It's gone from the 43.60 level to today's high, all-time high of 65.01. We still have our long position from a long time ago of AIQ. The AIQ is the AI ETF, artificial intelligence, going towards its all-time highs. So, I mean, we're still long from a lot lower down, the 28 level, that's at 52. Bank of America, I spoke about just a moment ago, the XLF. That's why we've stayed in Bank of America. Look at this, all-time high yesterday, almost an all-time high today. A CDE, that we've still got a little bit left from CDE, that's core mining. It ran up from under 8 to the 23s. We took quite a bit off. We've got a little bit left. And look, it's rallying very nicely. GE, one of my favorites, I would say that Rocket Labs is probably my favorite now, but GE, one of my favorite, all-time high as we speak. We're in from 198. We added just the other day at 310. Here it is at 328, doing really nicely. So at General Motors, we're in from lower down. It's almost at an all-time. Yesterday was an all-time high. Robin Hood, we had huge profits. We're in from 16, just a little bit left from there, but we've added to it various times. And here it is. The last one was at 109. It ran all the way up to the 137 area, pulled back. We're still long, but it's really struggling. I'm saying that it's kind of goes together with Bitcoin, which is struggling. It's trying to look, the 9-period moving average turned green. So that's a positive, but it hasn't broken out from this rectangle formation. We're still long. IBIT, the iShares of Bitcoin from much lower down. We've got Iran, a little bit left. We had it from the 22s. It ran all the way to the 70s, pulled back, and we're trying to get, we actually still have some, and we'll see what happens from here, but it's trading now at 45. Let's see if we can go to, we got Microsoft from way down, hasn't done so great lately. I can understand that. We're trying to get back into our symbolic, because we had that for ages and it ran unbelievably well. Then we got out and it hasn't been acting all that well. But look at the way it suddenly turned green. This is in the robotics. Walmart is its biggest client. So we've got others as well. But the most important thing is I use these indicators to tell us about short-term, long-term, medium-term, whatever it is, that how we can keep these positions. And let me just go to this right now. wanted to show you before we go to the break. I think we got the break. We're going to have Tim Ward coming up. I just wanted to show you, look, silver. Our silver stock's still good. Our gold stock, we've still got a little bit left. Look, trying to go for a double top. We'll see if that's going to work out. 82.67 in silver. That's the continuous contract. But look how the 9-period moving average is so much above the 14, and that's really good. Look at the MACD. Relative strength has weakened quite a lot, as has the stochastic. So I'm waiting to see, do we double top here at 82.67 for a little bit of a proper breather? This is just a 2-day pullback, and now we start to move up. So there's a lot to look at. Look, the technicals of silver, the techniques of gold, we still have our gold position, are still in all time frames. Look, daily, very strong. Weekly, very strong. Monthly, very strong. I'll be back in a few moments with Tim Ward. We'll be discussing the markets. As soon as I return, this is Basil Chapman sitting for Tommy O'Brien. Dow is up 512.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. Basil Chapman sitting in for Tommy O'Brien, and this is the Tom O'Brien Show. I have a show at 10 o'clock to 11 called the Tiger Technicians Hour, and my service is the newsletter. That is the new, let me just try to find this. Here we go. The opening call newsletter. I've just got it right, and I believe we've got Tim online. Tim, how are you?
Good. Happy New Year. So
and a happy new year and successful year to you, and a healthy one.
There you go. So let's take a look. This is a chart. Last time I was on the program here, I displayed this chart, and for some reason that, okay, the bottom window is the SPX daily. Next window higher is the SPX VIX ratio, and going last year, or actually no, this year, September, early September or late September, early October, this ratio is making lower highs as the S&P was making higher highs. Then you got a big down day there. Then from that down day, in general, the market kind of just worked higher, and this was going into December 22nd of last year, so about a couple weeks ago or 3 weeks ago. Anyhow, the SPX VIX ratio is making higher highs, while the SP VIX rate, or the SPX, was making hadn't hit a higher high yet. It was just testing a previous highs, actually making a little lower highs. But since the SPX VIX ratio is making higher highs, it predicted that the SPX will make a higher high, and so that turned out to be true, and finally we did go. Today we're making higher highs, and the only thing I want to point out here is, as we're making higher highs on the SPX, this is the bottom one, it's the daily SPX, we're hitting new highs. Now the ratio is not. This is updated a couple, anyhow, we're updated, but you can see the ratio is making lower highs as the SP is making higher highs. So now we have a divergence. We did, the SPX VIX ratio did predict we'll hit a new higher high. We did. Now we're hitting higher highs. Now the ratio is making lower highs. Well, so is that a bearish sign and we're going to go down immediately? No, because that the reason why this divergence can last a while. Last time we had this type of a divergence, if you go back to don't like
that's
this
that
drawing.
pink column, right?
Yeah, let me get a bigger tool here. There, I can see that. Okay, because this divergence, the last time that happened, it lasted 4 weeks, and the SP went up for 4 weeks. So we got one right now, but doesn't mean we're going to hit the top like today. It could be a month from now, but not right now. So it's a warning that we may be heading into a top, and this divergence can go away if the SPX VIX ratio makes a higher high as the SPX makes a higher high. But as of right now, we have a divergence. So let's kind of look on where we are in the whole thing of things. As you know, I'm a big fan of panic. The more panic there is, the more bullish that. So I measured trend. Readings above 1.2 on the trend shows panic. The more days you get above 1.2, the more bullish that picture becomes. And the bottom window is a 3-day, the next window up to 2-day, and this is a 5-day. Kind of mid-December, we got a 2 and 3-day trend get bullish. Kind of picked out this low right there. Then early January, a couple of days ago, we got the 2 and 3-day trend above 1.2. So that's kind of where the market started to rally. We're still rallying. So we had panic going into that pullback into the first part of the year, end of December, 1st of January. And now we're rallying out of that scenario. So let's kind of take a look where we are right now. And we're kind of, this shaded pink area are times when the trend and tick reach bullish levels, now reach panic levels. So there's kind of a support area between 664 to, I don't know, I can't quite read that, 680 to 660 area on the SPY. That's where all the panic happened. pretty much going back to mid-September. So it's quite a bit of sports. But right now, a couple of days ago, we had a trend of on the closed. Well, actually, yesterday, we had a trend close 1.16, 237 downtick reading. That kind of got us a boost up here, so we like to see that. So how high is high? I don't know. I'm long. I'm staying long for right now. I see some intermediate term divergences, but on a short-term basis here, the S&Ps look good. So I'm holding along for now. It gets too exuberant here. As we push higher, I may back off that long position, but right now I think everything is fine. So far so good. I'm staying long. All right. That said, got any questions on it? We can move it forward. Take a look at the gold market.
Just to clarify, so parallel motion with the trend and the position, in this case the SPY, fine. When you get the divergence, that's when you put this cautionary note on, and that's where we are, right? Not to say anything's happening yet, but it's just like a little warning.
Yeah, there's a warning because the S6 ratio is not hitting higher highs where it should. And
okay, good. I'd like you to continue if you want.
Yeah. So anyhow, that's but that divergence again can be last time we had that divergence lasted a month before it took effect. So so it's nothing to worry about right now. Here's a chart. I keep showing. You have to look at the bigger window. The bigger window rules the smaller window. So this is a monthly chart. The monthly charts rule the weekly charts, rule the daily charts, rule the hourly charts, and da-da-da. As long as the monthly charts remain bullish, really, that's a good sign. That's basically you want to have your foot in the door, I guess, or foot in the gold market. And we're still hovering around the 70 level. This is a current one. And last time we got around 70, we stayed above the 50 range for 12 years. So I'm thinking we could do the same thing here, because last time we stayed below 50 on the RSI of the XAU NDX ratio. So as long as this RSI stays above 50, that says gold stocks are outperforming the NASDAQ stocks. And I was thinking to myself, well, we looked at the NASDAQ stocks. Let's take a look what the gold stocks is compared to the SPX, the SPX stock. That's our next chart. So I hear the music coming on.
Yeah, actually, a lot of people are waiting for you to come up with, to discuss that. So we'll be back with Tim Ord in a moment. The Dow's up 530, S&P's up 45. Basil Chapman sitting in for Tommy O'Brien, interviewing Tim Ord. As always, a wonderful interview. I'll be back in a moment, and we'll both be back, and we'll be talking about XAU and the gold index. So.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks, we're back. Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show. We're going right back to Tim Ord. Tim, your next chart you're about to look at is?
Right. We're going to look at this. This chart was the SPX or XAU to the NASDAQ stocks, and it's bullish because the RSI of that ratio is above 50, and as long as it stays above 50, then gold stocks will outperform the NASDAQ stocks. So let's take a look at the...
Can I just mention, if you don't mind, this is the Philadelphia Gold and Silver Sector Index. I was asked if Tim would include silver in his analysis. I don't know if you want to do that because you've combined the gold and silver sector here, but I just wanted to mention it. Can you continue?
Yep. Actually, we're going to cover silver. I put that on. Actually, we can cover it right now. I had an email, so they probably contacted you too. But this is the SLI. That's the silver mining stocks ETF, and the bottom window is the SIL to SLV. SLV is the ETF for gold, so it's the silver miners compared to silver. So I went back to 2010, and when this ratio, so this is a ratio, the bottom one is that ratio. So when the ratio gets above 2, it's usually a high, and that's these times right there. It's kind of, only happened 3 times. But anyhow, when it gets above 2, it's silver stocks are expensive compared to the price of silver. Let's put it that way. And when it's down below 1.25, we're actually 1.22, if you notice right there. But I went back and drew I know this is kind of a purple thing going across the bottom there, and I marked the times anytime it's got below 1.25. And this is one time right back there. That was 2016 low. Then from mid-2023 to mid-2024, it was a buy. And we just dipped back down there over the last month. We're at 1.22, anything below 1.25. So what that says is silver stocks are cheap compared to the price of silver. Even though these silver stocks has gone through the roof, the ratio going back to 2010 show this is a good value. So silver stocks, in my opinion, have not finished running up. Now, this is a monthly chart. I know the RSI on SL, silver stocks right now is up around 80. Well, it's actually 82 point, almost 83. And that's an interesting, another thing. When the RSI gets from 70 to 75, it's usually a top. It gets to 80 to 85, a lot of times their continuation runs to the upside. And we're doing that right now. We did actually hit 85. So this, in my opinion, is not a top. Gold stocks or silver stocks are cheap compared to the price of silver, and the RSI got above 85. So even though you may see some minor pullbacks, it's not a top of any consequence. I'll put it that way. There will be some consolidations along the way. We'll have some, but I don't think this run is near. It's still in the early stages of a run. So a lot of people are saying, RSI can't go any higher. Well, it can, but a lot of times you get to 85, that's a continuation of a up move. So I'm thinking this rally is going to continue. So anyhow, I did get that email. They probably emailed you too, and they asked me what the opinion was, SIL compared to silver, and according to this chart, it's a buy. So that seems ridiculous because most of these gold silver stocks have, doubled if not tripled. So, but evidently we got more to go. So I'm just a chartist. I don't pretend to predict the future, but this chart here is bullish. So
just a question, a follow-up question was: does silver lead gold now?
Actually, I have that chart. When silver way outperforms gold, that's usually a bad sign. And I don't have that chart right in front of me, but I do trace that deal. In bull markets, usually silver outperforms gold. But if silver way outperforms gold, that's a bad sign. And we're not to that bad sign yet. I don't have that chart in front of me, but I do pay attention to that chart. But right now, yes, silver is outperforming
Thanks for that information,
gold.
Yes.
Yeah, there is a correlation there. Let's see where we are right now as far as what gold stocks are doing. The bottom window is the GDX up-down volume on a 50-day average. Next window up. This one's not too important. That's the reason why I put it into kind of a secondary. The bottom window seems to really predict what the gold stocks are going to do. So even though this advanced decline 50-day average have some relevance, the bottom window, the up-down volume, seems to be more important indicator predicting what gold stocks will do. So I did a 50-day average. This chart goes back to 2017, mid-2017. When it gets down below minus 20, it's usually a buy. It holds above zero. Can get up to 35, I guess. But it doesn't really say it's overbought when 35, so bottoms act different than tops. But as long as this indicator holds above zero, we're coming in right now about plus 10. The uptrend's intact. And all the blue area across the chart shows the times when this indicator is from zero and higher. So these are all bull runs. This bull run, in other words, it basically stayed above zero. That was a bull run there. This bull run lasted, looked like a good year. There's a small one there. This one lasted, 6 months. The one we've been in right now started and basically last year about this time, approximately in January sometime, looks like. I'm kind of eyeballing it. And we're still going up. We're still in the blue area. We haven't closed below zero yet on the up-down volume. So the uptrend is still intact. And I had a lot of emails about the RSI going to 70 and all this other stuff. And don't care. As long as this indicator stays above zero, then up volume is outperforming down volume. That's the definition of an uptrend. So uptrend still intact. That's kind of an intermediate term indicator. So let's look at a short-term indicator. This is the daily cumulative advanced decline for GDX, and next window higher is the daily cumulative up-down volume for GDX. And I put a Bollinger Band on it. As long as these two indicators stay above the mid-Bollinger Band, which they are, you kind of see it right there. We're above the Bollinger Band, and we're above the Bollinger Band there. So that measures basically advanced decline, still going up, and up-down volume. Up volume still outpacing down volume. As a matter of fact, if you looked at up-down volume on this one, we're hitting a new high. So how long can this last?
Confirmation, right?
Yeah. Yes, I don't see any weakness at the moment. How long can that last? Don't know. Really don't care. As long as it stays above the mid-Bollinger Band, the uptrend's intact. So even though we're up probably in the 90s somewhere on GDX, I don't see a top, at least not yet. So how high is high? Don't know. But momentum rules all indicators. As long as these two indicators hold above mid-Bollinger Band, trends up. So,
Tim, that was a fabulous analysis you gave us on all the different sectors. We loved it. I can see the responses are very positive. Thank you so much, and we'll be looking forward to your update on Thursday.
all right, we'll talk to you then. So,
Thank you very much.
Love
So
being
this is
on.
Tim Ord from the Ord Oracle. Check out his newsletter, and we'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is January the 6th. This is the Tuesday Tommy O'Brien show. Tom O'Brien show. Tommy's out for the afternoon. The GDX is up 349 and 91.94. This is going to be very interesting because the let's go through this. The 914, the green 9 above the 14 is really strong. It's in leg D, it's in daily, it's leg E. In the Chapman methodology, you want to get to a D and then assess what's going on. All-time high in the market vectors gold miners ETF in the monthly chart as well. This is all-time highs. This is really amazing in terms of just looking around and seeing the way Look at this. Let me go back here. You remember I was looking at this earlier. Can I do that? I'll just show it to you right here. Look, here's the weekly chart of the GDX. Look, from the moment it crossed positive, this one indicator, the week of the 7th of February 2025, the 9-period moving average crossed over the 14-period moving average, and it's been green ever since, and it's actually expanding. That's really important. Have a look at the Dow. Look at this. The Dow since the low of June last year, was that June? Yeah, from June, 9-period moving average has been positive. And look at the price. Look at, we can do this with many other things. Look at General Electric. General Electric is trading right now, 9-period moving average. Look at where the 9-period moving average crossed positive back in April. Actually, that's where we were along our first position at 198. And look, all-time high today. And the 9-period moving average, when this pulled back right there in the weekly chart a couple of weeks ago, that 9-period moving average didn't go pink. It stayed strong green. Therefore, it allows the price to move up like a cork in water. That's really important. Even at General Motors, I mean, this is really something. So this is a move into the industrials, the cyclical stocks. When I did my webinar a couple of weeks ago, I spoke about it, made a big deal about it, that there's been a market change. Look at many of the high-tech stocks and the tech stocks that are just not doing anything. Microsoft, they're not doing well. And look what's leading. General Motors, Caterpillar. I mean, this is amazing. General Electric, Alcoa. Look at Alcoa as we go to the end of the